Welcome to Bears in Exile. Today is Sunday, April the 15th, and this is our update to the financials. Looking at Bank of America, Citigroup, FAS, FAZ, Goldman Sachs, JP Morgan, Wells Fargo, and XLF. And we're just going to do it in alphabetical order, and away we go with Bank of America. Yep, big ugly day on Friday. Short-term moving averages pointing down, middle Bollinger Band above everything, closing below the lower price consensus level. Back into the bar we go, and it's not attractive. We're very close to the previous floor, newly made floor. Beyond that, there isn't too much until you get to the previous month's price consensus level, major price consensus level at $8. And do I think that that's likely? Sure looks probable. CCI ticking down, 14-day RSI moving average ticking down, stochastics mixed, actually slightly positive because the slow is barely ticking up. Down on the RSI, down on the MACD histogram, ending this little slant up that we were having, and down on the MACD itself. So very encouraging. Back out a little bit. That 14-day has all kinds of room to move to the downside, and changing the momentum and direction of the MACD histogram, not good for bulls. No. We could have the fast stochastic come up here and meet the 14-day RSI moving average, turn around and continue on its way down. That would be really great for the bears. May not even get that far. Looking at the volume at price, we can see that, yep, that $8 level is the first area of real support should we get through this floor. And yeah, that's not too far away, except that 50 cents or whatever is pretty good on an $8 stock. So anyways, we were saying the financials look terrible, and lo and behold, at least this one, terrible. And room for much more terrible. Citibank. Yeah, more of the same. We exceeded the Thursday green bar. We're coming in on the recently made floor, which essentially is a retest of the major price consensus level from the previous month. Although that we've already peaked below it, so breaking that should be more than possible, in which case we'd be going down for a test of the 200-day moving average, which almost coincides with this previous floor area at 32. So between 31 and 32, that would be completely natural. However, notice the 14-day RSI moving average much lower. If we zoom out, yeah, it's not up here, it's down here, but still plenty of room to move to the downside. The stochastic, the MACD histogram going sideways, MACD going down, RSI down, CCI down, stochastics slightly up, and the 14-day RSI moving average still pointing down. Very, very likely 200-day moving average. And I would expect there to be some kind of a bounce at that point, but or at least a pause, should, unless the world is going to fall apart due to Euroland, which now is becoming an issue once again. But still, ugly, 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 not far away from the previous floor, and a little more down move be terrible for the markets. So I like it. FAS, the 3X bull ETF, and yep, closing right at the bottom of the green candle from 2 days ago. Well, the start of it, I should say. So getting back to that, the big candle shouldn't be too big of a problem. CCI ticking down, RSI ticking down, histogram changing direction, going back down, MACD down, stochastics mixed, the slow is going sideways. And if we pull it back some, we can see the fast stochastic has reached the 14-day RSI moving average, gone through it, and now will be the moment where hopefully it will turn around and continue down. If we do that, we should break the previous floor and go down to the major price consensus level, which isn't too far away from the real previous floor. Man, if that breaks, whew, that's just about it, just above 85. Be really, really terrible. in that case would be going down to the high 70s. So ugly, absolutely ugly. Short-term moving average is pointing down, middle Bollinger Band above everything, closing below the major price or the lower price consensus level, very bearish, and the long-term moving average bar is already taking damage. So bad. FAZ looking at the opposite. It's evil twin. Yep, nice positive day. Did not clear this the candle from Wednesday, but it's knocking on its door. And knocking on the door of the long-term moving average bar above the major price consensus level, 14-day RSI moving average ticking up, stochastics down, CCI up, RSI up, MACD histogram going sideways, that could be better, MACD itself ticking up, and going back a little bit, 14-day RSI moving average, yep, it has plenty of room to move, and the fast stochastic is just about to meet it. It's going to be time for it to turn around if it's going to. So yes, very encouraging. Take out this recent top, and we've got a shot over here at just above 26. So all kinds of goodness possible. Going on to Goldman Sachs. Aha! A little bit different now, isn't it? Clearing not only the candle from Thursday, but the candle from Wednesday. It's so close to the previous low, which is so close to the previous low before that. Anyways, closing just below the major price consensus level from the previous month. That is definitely bearish. Close to the 200-day moving average. It seems like that would be entirely natural at this point, and that will just barely beat this low from way back in February, and so that would be nice. Going back just a little bit, 14-day RSI moving average ticking down, still at the halfway mark, plenty of room to move to the downside. Fast stochastic attempting to curl right there, which is what it should do. Slow stochastic already pointing down, so it is mixed in the stochastics. Down in the CCI, down in the RSI, down in the MACD histogram, down in the MACD, all kinds of room to move to the downside. Ugly, just ugly. I guess I should look at this, because this is important too. Because not only do we have these floors, but the major areas of support, this one in particular, was already broken on Friday. We peaked below it, and so I mean that definitely is a sign of weakness. Just something to think about. We can see the short-term moving averages. They're going to attempt to leave the long-term moving average bar. Very bearish, very ugly. It'd be great to have confirmation, but by the time we do, it'll be at the 200-day moving average. So moving right along, JP Morgan. Yep, look at that. Beating the Thursday and the Wednesday candles. All that work to get wiped out. And so close. This one is interesting because even though it's been stronger recently, the possibility for decline is greater, in my opinion. Now, why would I say that? Because there's this big old huge gap here that, a big old nothing. The previous low is way down here at, 39 and 39.12 as a matter of fact. And if we look at its volume actually says 38. So very interesting. So move down, break this floor, and we should do some damage to the long-term moving average bar, and 38 would be the place to be. Beyond that, closing below the major price consensus level, middle Bollinger Band above everything, 14-day RSI moving average ticking down, stochastics mix, down on the CCI, down on the RSI, down on the MACD, changing direction, down on the MACD histogram, pulling back. Look at that, 14-day RSI moving average, even more room to move than the other financials we've been looking at. and we know that there isn't much here until 39 and 38. So very, very, very good for the bears, really. 200-day moving average right above 36. So we have 39, 38, and 36. Should be caught somewhere in there, but hopefully it'll be fast. That'd be great. But still no idea on that, and hopefully it won't bounce here at the long-term moving average, but certainly it is poised to more than do some damage. Wells Fargo Company, WFC. Look at that. Ooh, ooh, ooh. Closing below the previous floor that was just made. This is excellent. And short-term moving average is pointing down, going back into the bar with the real body of the candle. Middle Bollinger Band above everything. Not quite yet at the lower price consensus level for this month, but that shouldn't be too difficult. And what's beyond this floor? Well, the previous floor way down here at $30. So a very good possibility of a move here. And just like JP Morgan, just nothing really to catch it. 14-day RSI moving average, not as much room to move to the downside, but still plenty, half of it. Mixed on the stochastics, down on the CCI, down on the RSI, down on the histogram, down on the MACD. Ugly. Uglier than any of the others, which is very, very interesting. And, I guess I didn't pull back enough. 14-day RSI moving average actually has plenty of room, more than 50%. So very, very, very nice. Tested the 200-day moving average. Wow, that would be a lot. It just seems at the moment to be too far away, but we'll have to see how this does on Monday. And lastly, XLF. Yep, beating the Thursday candle and the Wednesday candle. Needs to have a retest of the newly made floor. And beyond that, the previous floor down here just shy of 14.5. If we look at the volume, you can see the next major level should be here at essentially 1470. Pulling back just a smidge, 14-day RSI moving average, all kinds of room to move, down on the CCI, up on the stochastics, down on the RSI, down on the histogram, down on the MACD. Not attractive. And as a matter of fact, did I look at the volume for Wells Fargo? I don't remember. So if I did, I'll just do it again. And here in Wells Fargo land, major support at 30.5. Alright, so there it is. A week ago we said it was ugly, and sure enough, it's pretty darn ugly. So and when that changes, we'll be sure to point that out. But nonetheless, it is what it is. And hopefully this OPEX week will not be too choppy. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.